And we should be live. Welcome everybody to another live stream of NIO earnings. And let me wait a little bit till this whole live stream is filling up with more people. Let's see how many NIO investors we still got out there, considering how the stock recently performed. But you know the drill, I'm not going away. So we will have another walk through my personal numbers here. So, well, the earnings report and a couple of Excel sheet numbers here. First of all, why don't you let me know in the comments whether or not you can hear and see me clearly. I hope this live stream works well from a technical side. Feel free to share it so more people can join us here. And if you're watching this video later as a recording, it will be available as a recording. I'm now doing a live stream going through NIO's earnings release. So this is the report which you can find at ir.nio.com. By the way, there's sometimes confusion regarding where to find these reports or when NIO is reporting. I just recommend you go to this URL yourself. You can sign up and you get a notification whenever there's any news that is relevant to investors. So that's one thing to do. So this will be the document which we will go through first. I hope I opened the right report this time, third quarter 2023. Yes, I remember some live streams I've done. I've already forgotten, but I also opened the wrong report until some people in the comment section finally let me know that I was walking through the wrong report. So it's always good to have your comments in between. I'm trying to be able to look at them, but this is all live, and so it's not staged or no script here. So there might be errors. So I'm depending also on your help and work to help me with this. So I see more and more people are joining. Seems there's no mistakes with the mic settings or the video settings. You guys can all hear me? Then we shall start. Maybe let me just start off with saying that much. I really like the report from what I've seen so far. So I just got this also a couple of minutes ago. So I may not have the full picture yet. If you find something in the report that you like my commentary, let me know in the comment section. I'm trying to pick it up because, I possibly might miss something here in between the lines. It's basically my first time that I'm actually reading through this. However, I already took some time in order to fill out my my business case Excel sheet here. So, I should be prepared for that. I can go through my personal estimates and compare them to the actuals. And that's possibly also why you might see why I like this report. Maybe let's start. Shall we start with the estimates versus actuals, or shall we go through the comments here? Maybe a bit of both. Let's mix it. Cool. So everybody's here. Around about 100 people joined in the first 3 minutes. That's great. I guess some folks in the US are still sleeping, or in the Northern Americas part, then possibly have some people in China, and we Europeans are getting closer and closer to lunch. Let's walk through this release. As I said, my short take here, I'm personally relieved. This is a good report, but as always, we will get a little bit more of flavor in the earnings call by the management. We also have some other news, I think, which might be covered here in this report regarding NIO acquiring factories of JAC. So that has been around for a rumor for quite some time. But anyways, let's go through the numbers first. So we always know already the vehicle numbers more or less, right? Of course, with the monthly reports. But what is the unknown here is how much vehicle sales we ultimately get. And my personal expectations here, that was actually a miss. I had high expectations. I said possibly around 2.6 billion. So these are in million USD. 2,661 million was my personal estimation. Came in at 2.3, or roughly, if you round it up, 2.4 billion in quarterly sales. And the reason why mine is off is that I just put 48,000 as an average selling price here, and that was too optimistic. The reason why I put a higher number here is, we had this transition of NT 1.0 to 2.0 platform, which resulted in that we had to get rid of lots of inventory of the old platform, which is not great. So that was putting pressure, I think, with some discounting on the on the old models that NIO had to get rid of. And then we had actually the ES8 launch, right? I think that, I don't remember the date yet, but I think in Q3 already we started selling ES8 again, and that's a high margin product, a high average sales price product. So I thought maybe we go back a little bit to the 50s, towards the 50s. That's the ASPs which we traditionally had. Not sure if I have it in here, but yeah, that's what I remember top of my head. So I was more optimistic here. But it's just a couple of 100 millions missing here in the end. So my estimates for total revenues was 2.9 billion. 2.9 billion came in at 2.6, considering other sales. I also had a ramp here in other sales, given that we now start to see that they are charging for swapping. Those kind of implications coming in there, but it was just a slight increase here compared to Q2. So that's the part where kind of my estimation has been too positive and has been off. I estimated a sales margin, so vehicle sales of 10%. So that was at the lowest end of the actually the guidance, because NIO guided towards a double-digit vehicle margin. And this one was very, very important. I think everybody was looking for it. And so we now get the actual, which was 11% vehicle margin. And that is really, really great to see. That's a great first step. And super important. Those charts out there about NIO and how much money they're losing and how they compare to other vehicle manufacturers. And what people are usually using is the net loss that NIO is making, and they divide it or set it in relation to the vehicle sales, right? But for me, it's actually more important that they are able to produce vehicles and sell them at a higher value that is the cost of actually producing these vehicles. And that's the implication of this vehicle margin. And they managed to do that. For example, Xiaopeng is not doing that. So they have currently a negative vehicle margin as far as I'm informed. And, this means actually, well, even if your sales increasing, you're not earning any money on the cars that you're selling. We've not now this situation in China that there's this price war going on, and there's crazy stuff happening. Like, for example, if you want to get an ID3 in China, you can get it around 15,000 USD or 15,000 euros if you convert the price. So nobody can tell me that Volkswagen is able to produce this product at a lower cost than 50,000 euros. It's impossible. And so what others are doing is basically they're throwing out their products into the market and even losing money on each of the product they're throwing out there. NIO is not doing that. They had struggles here in the past with the vehicle margin going down, but now it's back up at 11 digits, at double digits at 11%. So that's great to see. I may have been a bit more optimistic on the gross margin, pointing towards 10%, but it's at 8%. So, given all that, this is a great, great development in my point of view. Now, I've also tried to estimate, as always, the research and development expenses and the selling and general administrative expenses, SG&A. I came in at, I just took similar numbers than the last quarter as Q2 because that's basically what the CFO said in the last earnings call, which I think was an unlucky comment to say this. Basically was guiding to, we're gonna do the same R&D, we're gonna do the same SG&A going forward. And of course, they already told us that they're going to scale up battery swapping station build out, right? And so I just went by this and said, okay, it's possibly going to be pretty similar to the Q2 numbers. Maybe a little bit of scaling down on the R&D expenses because they have now launched quite a substantial amount of cars, and at some point they may not have to do all of these costs for vehicle validation, for running all of the tests in order to really launch a car. And so I'm expecting actually that this should drive down R&D cost over time a little bit. But I think the negative from the last call was that the CFO actually guided towards, no, this is going to stay the same. And I think hopefully today we also, given all of the discussions around cost savings and stuff, hopefully they will show us a more clear path towards how they're going to think about to narrowing this gap on the net losses, right? So came in lower here, but SG&A came in a little bit higher than my estimations. So overall, the total expenses are still higher than what I have personally estimated. And that resulted in a slightly higher net loss, loss from operations than what I personally estimated. And in the end, also a little bit of a higher net loss than I was personally expecting. So I thought they could maybe narrow that gap. Last quarter they lost on a net loss 835 million USD. I thought they might be able to go below the 600. They are close to that. So it's just, what is it, 50 million that I'm off here, not that much. And so I think it's actually in line with my expectation. The most important part for me is that we start seeing the net losses actually going down and decrease in value. And that's what's happening here. I think, given how the stock was trading, I think possibly lots of investors from the buy side actually didn't believe the sales side here, which was anticipating that. So if we're going through let me see if I can find this, but some of the estimates here of where is it? Not sure if I can find it right now. Net income. Yeah, here we go. So there have been actually, this seems to be a consensus of the analyst expectations here, and they've been at 555 million net loss, and narrowing down from, or net income, narrowing down from the 746 million that we had in the quarter before, and now keep on going down until we hopefully break even at some point. And that was the expectation, and with these numbers, this expectation is actually met. It's going into the right direction, although maybe not in the big step yet that some of the analysts here, given the consensus, has been estimating. I'm not sure about this, but it seems the street estimations have been earnings per share of minus 36 cents. If I'm correct, we're now landing at 31 cents. So that should be a little bit of a beat here on the bottom, on the bottom line, but not sure about this. To be honest, I need to double check that. Maybe with the help of your comments, I can do that. And I still have to read through the report first. But anyways, it's going to be quite close. So I would say this report largely is in line with the expectations, and it's showing the right things here: vehicle margin, double digit, and also then the narrowing of the net losses. That was important for me. What was a very welcome surprise in my book was, I think, that the cash I was anticipating to be 5.5 billion USD. So we had the Abu Dhabi deal, which was not yet reported. So it was in the news, but in the last quarter, it didn't show up yet. So that capital raised there, and 100 million or 1 billion convertible raised on top. All of those were not reported yet, and now they came in. And so I was expecting to see around 5.5 billion in cash, but we're actually at 6.2. So yeah, as they stated before, cash flow really improved, and that's given them a little bit of a nice better runway here. We now have the net losses decreasing and a better cash position than expected, at least in my point of view, expected. I'm not sure about the analysts out there, but we always have. I don't know if there's a company that has that much fear, uncertainty, and doubt around it than like NIO, but everybody is talking about, oh my God, this company is going bankrupt and whatever. But now they're having more than 6 billion in cash, right? And we now have the news today. I think I saw this in here as well. At least I saw it in the news that, where is it with the factory? Let me find it. JAC. Yep. Here we go. Here's the news. On December 5th, the company entered into definite agreement, to buy the acquired manufacturing equipment and assets of the first advanced manufacturing base and the second advanced manufacturing base of JAC. So this rumor has been out there for quite some time. Yesterday, we saw the news that NIO has acquired its own vehicle manufacturing license, which is quite rare to do in China. It's almost impossible currently. And I know another, I think, wrong narrative out there currently is that, well, JAC didn't want to partner with NIO anymore, and now we're having Huawei actually partnering up with JAC, building another premium car, and that's why they're selling the assets, because they've been disappointed with NIO. Frankly, I think that's not the case. And why do I think that's not the case? Because NIO already acquired this other bankrupt manufacturer, I think in 2022, the factory of that, and with that, the first step of getting the license of actually manufacturing. And I mentioned in my previous videos before, I also knew from people who had talks with the management of NIO that NIO was going to strategically shift off actually starting manufacturing their vehicles on their own. And that was already when I was back in China in the first half of this year. So meaning all of that has been going on since months, if not years. This has been a long-term planned step and is not going ad hoc and in panic. And therefore, I don't think it has anything to do with Huawei now doing some stuff with JAC. Actually, the fact is that Huawei is currently partnering with everybody. Chang'an, who else? I can't even name them. I mean, there's too many things going on. So this is just a coincidence. It seems like NIO purposefully did this step here. And now my point here is that they're acquiring those factories for RMB 3.16 billion, which should come in around 446 million USD. So if we go back into the cash position, which came in better than what I thought it would, if we say, okay, the factories costing around this, and this leaves them still with 5.7 billion in cash as of today, in a sense. I mean, the number will be different, but we could say after purchasing these factories, NIO still has close to 6 billion in cash left. Will be possibly a smaller number by now, given that they also still have some expenses in this quarter. So I don't want to make this look too optimistic. However, for me, this was a very positive takeaway of this report. Now, let's see if we have something else in there which I missed. I didn't look into this fine print at all so far. That's what I mentioned before. Now we're 200 people joined us. Thanks so much. This is awesome. By the way, if you want to keep us going here and support this channel, you can become a patron. That helps to keep us independent. I had to say on several occasions here that, I'm not getting sponsored by any of the companies that I'm talking about, not of the stocks that I'm covering, and not in another way either. I'm trying to keep this as independent as possible. As you may notice, I've not got any ads in between, so I'm also not depending on really selling stuff here on the channel. What I have is Patreon support, so that is great to see. And if you are joining that Patreon community, then you'll also get some more exclusive content from time to time. And for example, here a group chat, which I see they're discussing the earnings in here as well. But feel free to show your impressions of your first take on the earnings here in the group chat as well. I'm trying to do a little bit of a Q&A when I am done going through this report, and then also just a little bit as an outlook. After this live stream is finished, I will have a second live stream as always, where we'll live stream the management call and give you also my remarks on that. So I think I went through most of that here. Again, vehicle margin a highlight. Vehicle sales have been a bit lower than I personally expected. Lower ASP, which means possibly they are still giving a couple of incentives, like a free NIO pilot, stuff like that, and also some other gimmicks on top. We know NIO has not joined the price war in the sense that how others have been doing in slashing the prices too much. NIO only did this, I think, quite smart move in the way they've done it, of cutting the free battery swapping and give this kind of as an incentive to bring down the vehicle purchase price. So I think that was a great way of dealing with that, because ultimately the outcome could be, after all of this is over, and I think hear my baby girl crying in the in the background. Anyways, I think the outcome ultimately should be, and I think that's the game that NIO is playing, that once this price war is over, they will still be this premium brand. So they did not depend on slashing prices in order to increase sales too much. However, what becomes apparent here, if we look at these vehicle sales numbers that are lower, then it seems at least that these where is it, the 33,000 USD average selling price is pointing towards that the customers are still ordering, let's say, a minimal configuration, or the cheaper cars like the ET5, the ES6, and so on, and not so much the bigger, higher average sales price numbers cars. But we'll see. That, I think, over time this should also improve again a little bit. Let's hope. What else? Maybe let's look at some of the fine print here. Deliveries, we knew that. Completion of offering. Is there anything new in here which we didn't know? No, I think that has been discussed in my previous video so far. This is the manufacturing equipment acquisition that I just pointed out. As you know, I've been always a fan of the lean business model, that NIO is not owning factories, but I've done a video on this matter before. It seems that NIO has done a shift in strategy and direction here. Owning the plants, of course, will have the effect that they don't have to pay the fees that they had to pay to JAC anymore. So that helps, of course, with profitability in the end. Let me go quickly into my Twitter page here. I've tweeted this one again yesterday. So basically, NIO has paid JAC millions in the past. So 72 millions in 2022, 97 million in 2021, 154 million in 2022, and I'm estimating maybe close to 200 million and 300 million in the coming years. So, they're now making this cut. And these are just the fees to pay them, around, what is it, on average, around, 1,600 USD per car, which they're having to pay to JAC. That obviously will not be the case anymore. I wouldn't have not minded if they were sticking with the JAC deal, but on the other hand, I think my interpretation here, and that's also what I posted on Twitter yesterday, by the way, you can follow me on Twitter at _MM85. I'm currently more active on Twitter and on my Patreon community than I am on the YouTube channel for reasons that I've previously discussed. And my interpretation is that buying the factories reduces the dependence on external risk. We've seen during the pandemic that JAC wasn't up to the game of handling some of the fluctuations there and the issues. It's paving the way to 20% plus vehicle margins. That's what they've guided for the NIO brand, but also for the sub-brands in the latest earnings calls. And we have been there. We need to go back there. But obviously, not having to pay those fees will help NIO to get there easier. And we don't know yet what will be the implications of owning these factories with also doing their own sub-brands. So my suspicion, as I pointed out in the latest videos, is that they are progressing to a platform provider for multi-brands. That's how I'm reading all of the deals happening on the battery swapping side. That's how I'm getting some information from time to time with people that are able to speak with management or visiting the factories and so on. And there seems to be a plan in place to have the Alps brand possibly be like a multi-brand platform. So a platform that is interoperable with different providers, different battery packs, and different architectures when it comes to EVs, like 400 volt, 800 volt, and so on. I might be wrong here. This is just my speculation. As far as I'm concerned, there's no news around this in the quarterly report here. So that might be, well, I actually doubt that they will say something specific about that in the earnings call, because that might be up to a separate announcement in the future, maybe linked to another announcement of another battery swapping partner, or maybe around product announcements at NIO Day or later when they're going to announce the sub-brand or the next battery swapping stations. I don't think we have it in here. So let's see. We have recently completed a thorough review, operations plans to actions plans. Okay, they're talking about opportunities to optimize organization, reduce costs. We know about the layoffs that have happened, but now they put it in here as kind of a way of telling investors, look, we're on this. We will bring down cost. As I mentioned in this report, they already started to bring down cost, or at least decrease the net losses, which is great to see. Okay, they say the increased margins of 11%, the vehicle margins are because of the a little bit increased average selling price. In my point of view, the average selling price is still a bit too low, but yep, that's one of the contributing factors: ongoing vehicle cost reduction and economies of scale. Exactly. The more they are going to sell, the better it's going to be also on a unit economic metric. This one is the offering, which I had in the Excel as well. Let's say what they have to say about the other sales. The increase in other sales over the third quarter was mainly due to the increase in sales of accessories, used cars, and provision of power solutions. As a result, continued growth in the number of users. Okay, so because of more people have to pay for battery swapping. I thought maybe the other sales could go up a little bit more. That didn't happen. It did go up, but just slightly. Maybe we're going to see more of that in the future. They still don't break out the European subscriptions. I haven't seen that yet. They still don't break out the e-commerce sales. Maybe all of that is still just too tiny to have a separate line in the earnings report. The increase in other sales, charging piles, yeah. Okay. Nothing more important in there. Let's see what they say about R&D. They increased a bit. The slight increase in research was mainly attributable to increased personal costs and research and development functions, partially offset by decreased design and development costs. That was what I was talking about, and deduction of these expenses due to the support of technology advancement provided by local government authorities during the third quarter. Interesting. The decrease in research and development expenses over the second quarter of 2023 was mainly due to the support for technology advancement provided by local government authorities. Okay. I don't know what to make of that, to be honest. SG&A, maybe something about battery swapping here. An increase because of personal costs related to the sales functions. Okay, they said they're gonna hire more salespeople, and the increase in sales and marketing activities, including launch of new products. So they don't mention that SG&A has gone up because of build out of battery swap stations, but due to more marketing expenses. So I'm tracking one metric here, which also I think was a positive in this report. So I am tracking here SG&A per vehicle sold. So I'm setting the marketing expenses and sales expenses in relation to how many cars they are selling. And traditionally, they have been averaging around 12,000 USD. And in Q2, they have been terrible, close to 17,000 USD. And that's because, of course, sales have been very weak. And now in Q3, this is a very, very nice number here. It's the first time that it's breaking, not the first time, but, one of the few quarters that's breaking well below 10,000 USD of SG&A per vehicle sold, which is great. This ideally goes down or stays like this, because that's exactly how you ultimately end up becoming profitable if you don't have to spend more on sales activities and marketing than in relation to how you increase your sales. And that's what's happening here. Or basically, it's now showing more again how it should be. And this is a very good progress here, similar to the R&D per vehicle sold is also going down and should go down much, much more in the future, hopefully. So this relation is going down on those two metrics. That's great. And that's all despite that they put a record amount of new battery swap stations, in my point of view, close to 400, if I'm right here. I've been tracking that one. And that's, of course, also adding some more cost. We may see a little bit of a lagged implication of that. You don't know when they are going to pay the providers, the third parties, and so on. But overall, this was another great takeaway here from this earnings report, which I think is pointing towards the right direction here. What else? Is there any additional remark? So the guidance, of course, comes in a bit soft, 47,000 to 49,000 vehicles. I think everybody was kind of anticipating this. This would be guiding towards, if my maths is not off here, and we take the higher range of the guidance, 49,000 would come roughly to close to 17,000 in sales in December. and would put us slightly above the 160,000 annual sales. Seems that this is where we're gonna land, 160,000 annual sales, slightly up, 33% year-over-year growth. Not great when you think of, all of the excitement we had going into this year, but not too bad either, given the transition year or what's happened with COVID and how everybody is kind of in fear of how bad the Chinese economy is doing. So given that, it's still a yearly growth, and that also sets the baseline for hopefully higher growth in the next year. Who knows? This is now where the earnings report will be coming in, the earnings call, where we possibly get a little bit of flavor on that. I think everybody will be quite pessimistic. I think that's reflected in the stock price, quite pessimistic about next year and whether or not the company can grow. So as you know, the first quarter with Chinese New Year and so on will be likely soft. That's always the cyclical nature of the automotive industry. So don't get shocked if we get some Q4, so Q1 over Q4 negative quarter-on-quarter numbers. That might be possible, but we'll see how they're gonna do about some sales incentives maybe here and there. And then, of course, the big question mark is what will happen with the sub-brands next year. So what else? Yeah, I think this is kind of why I'm pretty happy with this report, because it's showing the right direction with decrease of net income and double vehicle sales margins and a better cash position than I have anticipated, even after they are now buying the factories. So that's the great point. But I think, investors will be asking, where's the growth? How's the outlook? And here I'm expecting just personally a little bit more from the CFO. As I mentioned, like in the last earnings call, he was not given a real outlook, like how is NIO anticipating of narrowing those losses in the future. And I think that's where people want answers. But overall, I think this report is largely in line with expectations, and it's taking quite a bit out of the fear, uncertainty, and doubt that has been spread around this company, to be honest. At least that's my personal opinion and perception. What is yours? Maybe time to go through some comments here. Yep. Would like to know how the phones are selling. Good point. I'm just hearing that the first batches have been sold out, but no actual numbers, like something that could be in around 40,000 NIO phones being sold. We'll see. I'm not sure, like, how much in focus the phone will be for now, when it comes to earnings and investors' questions. I think it's, the good thing, like, as I mentioned before, the R&D costs related to the phone are now behind us. I think that will also keep driving down R&D costs in a relation in the next couple of quarters. I think parts of the team that are let go might be in the area of the phone development and the battery development. Maybe some people which they hired to get everything up and going to kind of acquire and come up with this technology, but now they need a different team or a smaller team to actually operationally run this. You need somebody now who keeps on optimizing the operating system, who's doing some iteration on the hardware, I guess. But the difficulty was coming up with it in the first place, and they've now done that. So I think that's where some of the efficiencies come in. That's where some of the people who they let go might be cut. Here's a question by Derek. Will sub-brands cars be using existing NIO battery station Good question. First of all, we don't know yet even if apps will be swappable at all, but as I made the comment earlier, I personally do expect that this will be actually a platform, a new platform at which Alps will be one car and brand on top among multiple others that will be swappable. And yeah, it's a good question whether or not they will be opening the existing NIO swap stations to those NIO-owned brands. So yeah, who knows? Did they not buy factories buildings, right? What do you mean? You mean because they say they only bought the assets and the production equipment? Good point. Yeah, that might be some small print. It might explain a little bit why it's a little bit cheaper, or I perceive it as being, kind of cheap, but not sure about that, to be honest. So again, if you joined this live stream, this is just where I go through the earnings reports. And I will do another live stream on the earnings call, which gives us a little bit more insight, a bit more flavor on all of this. And overall, this, in my books, I'm personally a little bit relieved about this report, given how much anxiety there was around the financial viability and sustainability of this company. At least they have also, now really achieved the guidance of the double-digit vehicle margins again, and the net losses are decreasing as well. One more question. Do you think in the near future, autonomous taxis will be utilizing a battery swap station if that concept ever comes to fruition? Yeah, this is one of the advantages of the battery swap system, that it is already demonstrated today. A couple of people have access to this, that it works as a fully autonomous system. And this is obviously an advantage over supercharging in that regard, because for superchargers, you would need kind of a robot who plugs it in. I'm not saying that's impossible, but has not been demonstrated in the way that NIO is doing those automatic swaps yet. And it's very exciting. Maybe if you watch my Twitter, I'm posting some NIO NOP Plus beta videos of city driving that I'm now seeing. So that's also a considerable improvement against what I've seen earlier this year in China, which, by the way, I've seen Frank here in the comments. I met Frank. Yeah, here we go. That's Frank, a NIO owner in Suzhou, who let me drive in his NIO car with NOP Plus beta on highways. That one worked excellent. But on highways, it's a much different thing to do than on the city roads, right? And now NIO's demonstrating that. I'm also happy with the fact that I'm now, being more progressive on that and kind of, showing what they got in technology. I think the NIO Innovation Day was kind of the kickoff where they started being more outgoing of explaining their vision and showing what they got and what's their approach and strategy. In the past, they've been really too silent about all of this. An issue is, of course, that all of that is in Chinese, so that's why I'm trying to give you kind of the insights whenever I can. Yeah, but overall, I would say battery swapping and autonomous driving, that's a match. That's really impressive, especially if we think they are going to move into making the public multi-brand swap stations. I mean, that's if you watch my videos, that's speculation, but that's how I'm reading it, that it's going to happen. And so, Peter, your question, who do you think are the other OEMs in talks with NIO on a battery swapping technology? I think also that's what I pointed out in my latest videos when I pointed out this graph of companies that are currently already doing battery swapping. NIO is not the only one doing battery swapping, but there are some mainly state-owned manufacturers that are doing it. Bike, FAW, SAIC, Dongfeng, and we had Geely and Chang'an. And as you know, Chang'an and Geely now already partnered up with NIO. And I expect some of the others mentioned to start cooperating with NIO as well on the battery standards and possibly on this NT 3-point platform that will work with different brands. And the point is here that I think it's good that they approach these companies because, first of all, they've been collecting some experience with battery swapping, and second of all, they are the ones who have also other state-owned EV brands, sub-brands, if you will, other different brands that are currently launched in the markets. Plus, they are usually joint venture partners of the Western brands, such as Mercedes, Daimler, Audi, and so on. So, yeah. Interesting comment here. I agree. I recognize NIO shows how it aligns with the United Nations type green energy and green economy, but it's generally ignored by the investor community despite its full prospects being shown. Yeah, I mean, this is a very soft fact in that regard, but I do hope that this will at some point materialize also in additional revenue streams like for grid balancing and so on. And also battery recycling will get pretty interesting. So this is where, not having a fixed battery might become something interesting. And also, separating the vehicle ownership from batteries to vehicle body and batteries, keep the owner separate. That's also very crucial for that, because if you're owning the battery, you don't possibly want to degenerate your battery for providing grid balancing, right? So the incentives need to be different. All right. So I think that's it. Overall, that's my first take on the earnings call, and I think it's a positive in my point of view. Again, if you're watching this video later on, this has been a live stream. I will now stop this live stream and open another live stream for the earnings call later on, where you also get my commentary around the management takes on these earnings. So far, so good. Thanks for your support. Thanks for tuning in. And yeah, please leave a like, share this video, and also consider becoming a patron so you get some extra insights and you help to support this channel. Thanks for watching. See you guys in the next live stream.